I wanted to get your take on how you price risk right now.
Well, listen, I think when we look at the broader backdrop, it's a market that's largely gone nowhere for much of the year. But when you look under the surface, the leadership relationships are actually risk-seeking. We have small caps better than large caps, discretionary better than staples, high beta better than low beta. So the central question we're always trying to answer in this business, how do we know the difference between a 10% pullback and the start of something more serious? Well, if it's the latter, you tend to see leadership get very defensive, and we just haven't seen that yet. So we have a tough case getting too defensive here. We think generally the market's in okay hands.
Well, could you make an argument, and this is a chart, by the way, that looks at small cap versus large cap to show the outperformance we've seen with small caps. That's the Russell 2000 is in the is that white line. Can you make an argument, though, that small caps in some way is defensive because it has less exposure to the dollar, it has less exposure to international issues, less exposure to trade?
So we've looked at this extensively, and there's an intuitive sense that stronger dollar would be better for small caps. Historically, we can't prove it. There are periods of time where dollar's weak and small caps outperform, or when dollar's strong and small caps do better. So I think right now what this is telling us, small caps are a function of liquidity. Right? They are marginal issues more influenced by the liquidity circumstances. So we would argue that liquidity is still supportive for the broader market if small caps are outperforming. And keep in mind, what are the biggest pieces in the small cap index? Regional banks are the largest weight. What's leadership here? Regional banks just made 9-month relative highs versus the S&P yesterday.
And less tech, right?
Yes. So we think this is about banks here as well among these small caps.
Banks. What about road and rail? Because you also did a great chart on road, rail, really up.
Yeah, you know what I think is interesting, and if you go back about a month ago, the Caterpillar earnings call really freaked a lot of people out when the outgoing CFO of CAT talked about peak earnings and peak growth. We don't see it with how the rest of the sector behaves. We have CSX and Norfolk Southern and UMP actually making new highs, breaking out. We have Deere reaccelerating. We have CAT actually above where it was pre those comments. So I think when you look at industrials as a whole, particularly some of the transportation names, the railroads and the truckers, the sector's actually firming here. That is not a risk-off type message.